Hello, Face Warriors. How are you? How's everyone doing? Hi, Lazarus. Great to see you, buddy. Simon's fed up already, and the day has just begun. Good Fed day to everybody. Hi, Bando, FX Glenn. Okay, you don't need a link, Chad. Thank you for supporting our business. When Steve comes on, he'll show you. I want to get to some of the markets. This is a very important day. We have these every once in a while. You know how we're all used to saying, you know what, today is critical. Well, it's true. Almost every day is critical. Other days are a little bit more critical than others. I'd say that this is a very critical day. Face attendees, members know that I've been looking for one more washout in the Dixie. I've been calling for another high in Euro USD. This almost looks like a little 3. I'm going to stand by it. So far so good for one more washout in the dollar. Something I've been talking about. Steve confirmed with me. Blake also looking for the same scenario, but everything could change in a heartbeat with the Fed. So be prepared for anything and everything. Should the scenario continue to unfold, I do expect the highs at 121 to be taken out in Euro USD, and that we could have a 1, 2, 3. I'm sure that some people right now considering this might be a failing rally, and it could be perhaps a right shoulder with a neckline down here. But I'm going to stay patient, looking for about 121.5, although Hardy's pointing towards 22, 22.5, and in fact, those are some of the same levels that Nick mentioned. If we penetrate this recent high, for those of you that aren't subscribers, you could go anywhere and get Elliott, all on the same site. Elliott, Greg Horvat, award-winning technician from FX Street. How do I know? I interviewed him. So Greg also looking for this type of high. Maybe we're going to get one more pullback before it's accomplished. I think Nick also has a 22 level here. So now at my fingertips, Nicola Duke. The September highs are near major fib resistance. 722, 18, 123 and 25. So those are much higher. And she was saying still buy dips, looking for 330. So that supports it. Then you could also go to this up and coming trader, Blake Morrill. Blake's starting to become a pretty good trader. There's his look too. It's got the line right here. Don't fade Blake Morrill. Do it at your own peril. And then we have Volge, Steve Volge, which looks a lot like basic technical, but he explains the different sticks. So I know most traders nowadays are using candlesticks, and we have a great education section here for you guys. And then last but certainly not least, the bravest soul who went into the short side of Euro Pound before all of our other gurus here did, and also was very constructive cable when everyone was turning real bearish, Stelios. So that's a look in Euro. I just have one more chart I want to show, Blake, and I know you probably have tons of things to talk about, but I was also talking about the Aussie all week. And I know Greg had a pip. I sure don't like to, be on the other side of the trade as Greg. His hit rate's too good to be on the other side. But I was talking about that the pattern in Aussie looking complete. It's starting to look like it's going to manifest for a third drive. But I want to point it out. I know I teach this formation a lot. And Blake, when he has a level, he says this. It's why it gets there and how it gets there. I'm not as much of the why, but the how is important. So I do believe this is a daily here, right? So on the daily, I'm pretty sure even if we rally another 100 pips, and I expect highs between 81.50 and 82 on Aussie, the how for me is RSI. So if we're trading over 70, that would give me pause. But leaning towards shorts and Aussie up here. Okay, so that's pretty much it. I was saying look for correction in US dollar yen, and that's happened. Been about 60 pips or so. Actually peaked on a turnaround Tuesday. So this is what I'd look for. If I'm right, if my Nostra Pinkert forecast, and that's all it is, you know, it's a guess, right about one more shot down in Dixie. For one more new low, there's confluence around 90.40. For sure, US dollar yen is not going to make a new low, okay? So a new low in the dollar is only going to cause a correction in the end, maybe down to 110. You know, you'll do your fibs, you'll look at your moving averages. So after the dollar makes a new low, what are you going to do? You're going to buy the dollar making new lows? You could. Or why not buy something that will perform with a strong dollar that's already done pretty well with a sideways dollar? So look for, if we get a wash in the dollar, to buy a higher low in US dollar yen. So that's my thinking going into the Fed on a few different instruments. And with this being said, you know, there still could be some scalping activity on the short side of some of the yen crosses. You know, Blake pointed out what we had going in. It's on ForexAnalytix on Euro yen. So there could be like some counter trend opportunities here in Euro yen. Okay, there's a daily, but if you look at some of the intraday stuff, we have all kinds of, well, actually it almost confirmed here on the 1 hour, but looks like we're starting to get a failing rally here. So this could be a decent scalp. But I prefer just to do nothing today. That's just my style. You know, I interviewed Harianto yesterday. He doesn't care about the Fed or the NFP. Blake, I think, is a lot like that too. He'll trade and hold positions into these dread events. So what's your plan today, partner?
Well, you know, I really wanted to come in today short the dollar. I mean, that was my plan. Unfortunately, I didn't get triggered any of my orders. I wanted to short the dollar Canadian at like 123.50. Didn't happen.
Quite get there.
No, I didn't get there. I wanted to buy the pound dollar at 134.50, 134. I had a couple orders out there. I'm 100 pips away from it right now, so that didn't get here. So I'm just kind of at this stage. I'm only trading a couple cross rates, and I'm not trading the dollar. And I don't. The problem that I see with the dollar is everybody's expecting the dollar to be, you know, everybody's looking for a recovery, and that was like, you know, my big issue going into today is everybody is bullish, you know, or has been bullish. Or not. I wouldn't say bullish. Just everybody wants to buy the dollar, and I wasn't a believer of that. So therefore, and you saw people trying to get long the dollar yesterday, and that's why I tweeted that out. Everybody's like, well, what did you mean by that? What I meant by what happened yesterday is people were trying to get long the dollar yesterday going into the FOMC, and here's the dollar spiking up, and it spiked right in the, you know, channel resistance. I mean, and it came right off again. Now, can the dollar reverse, and can the dollar go higher? It sure can. I mean, I'm not going to sit here and be short the dollar, right, like going into the Fed and just assume that it's going to go down. You know, the Fed is, they have a really important task ahead of them today, is how do they start reducing their balance sheet, and, you know, how are they going to finagle that? Because you know, we've been in uncharted territory for almost 10 years now, with quantitative easing, this emergency, quote unquote, emergency measures that the Fed has employed, and now trying to now trying to back out of it. And this is like, you know, every other central bank is watching, because every other central bank has got to do the same thing at some point, right? Yeah. So, you know, how the Fed tries to engineer this is very important to what the rest of the world is going to be doing, and finagling their balance sheet reductions in the future, whether it's next year or 5 years from now, you know. And most believe that the Fed's just going to allow, you know, whatever they've purchased, you know, bond-wise to mature and just roll off versus reinvesting. So, so it's going to be interesting, and I don't know what the Fed can say today that can strengthen the dollar. And frankly, the only thing that I can imagine is whatever they do today is going to continue to weaken the dollar. Again, I've been known to be wrong on Fed days. So Fed days, these are the days where I try desperately not to get my butt handed to me, and try not to make a lot of assumptions at this point. So, no. So looking at the dollar, you know, just technically, and here I had to delete one of the lines from yesterday because I was taking a picture, but you can see the channel's down, and the trend is down, right? And there's no relief in sight yet in the dollar index. Now, if we can get above these highs, which is last Thursday, I believe, which would be 92. Was it that last Thursday? No, that was last Friday. Hold on.
92.60 up there.
That would be last Thursday.
Yeah.
So this would be on the 18th. So
Monday.
Yeah, this would be Monday's high. Sorry, I didn't mean to yawn on you guys, but we have to get above Monday's high. So we have to get a new weekly high in order for me to even be semi-interested in being long the dollar. And really, it's above Thursday's highs, where then I go, okay, well, you know, the dollar is ready to bounce. And I just don't know if we're there yet.
You know, Blake, it almost looks like a little descending triangle here. I was looking at it earlier, the high at 92.60, the flat bottom at 91.60, and if we start closing under 160, and we could bounce from this 160 again, but back under 160 measures 90.60, which is new lows. There you go.
Yeah, something like that. Yeah, I mean, I have to imagine that the dollar is going to continue lower. And you made a good point. Like, what are you going to do? You know, you short the dollar yen. You know, does the dollar yen hit new lows? Now, here's the thing, though. If the Fed maybe picks up the pace, or from what expectations are to continue to reduce their balance sheet, the dollar maybe gets hurt, but maybe the dollar gets hurt, and the stock market, you have to watch the stock market if you're going to trade the dollar yen. You know, so if the stock market just doesn't like the fact that the Fed is completely reducing its balance sheet at maybe an unprecedented rate, maybe the dollar yen does get completely creamed today. You know, and but I don't know. I mean, whenever I have a feeling on the yen and I'm trading it, I can get pretty aggressive, and I'm pretty good at trading all the yen pairs when I've got a good beat on them. Right now I don't, and it's okay. Nice wedge thing. Yeah, popped out of the wedge. We've been talking about it since yesterday. If you look at the you know, since yesterday, here was the 1 hour chart. Yeah, it was set up yesterday. Yeah, nice. Yeah, so I mean, if you're you know, using ForexAnalytix, you're very well aware that this was happening since yesterday. So, but and technically, I mean, it says shorted, technically, but again, it's pretty risky ahead of the Fed. But like I was trying to say is, if I have a good beat on the Fed, on the dollar yen or the yen pairs, I can trade them pretty well. But right now, I just don't. And as I was stating, is I don't it's okay not to have a good feeling. And right now, I don't have a good feeling on the yen pairs.
On anything.
Well, you know, I mean, I look at the dollar, and the dollar's pretty well defined. It's bearish.
Yeah, that's true.
Unless something switches today, it is bearish. And like I said, I wanted to go into today short the dollar, and unfortunately, I just didn't get any prices that I wanted.
You know, that's interesting, Blake. People confront that every day, and you know, the new T-shirts are going to say FOMO on it, and okay, so you didn't get your entries. A lot of people would start to force it because they didn't get it. You know how to say, okay, I'll just wait, let the markets reset, and come to me. And most people are afraid don't have enough confidence in their word to say the market will come to me or there'll be another trade. So I could tell you're a little frustrated you didn't get your positions off, but you're not saying, well, I'm going to go ahead and do it anyway. And a lot of guys do.
Yeah, and well, that's the T-shirts we made that say no FOMO is no fear of missing out, because I'll tell you, one of the worst things, and it almost happens to me universally, like universally, is whenever I catch myself chasing the market, I lose money. So whenever I look at, you know, something and I go, oh man, I've got to short the dollar right now. And it's already been moving. It's like I think of the value proposition. You know, like here's a good example. All right, here's the Kiwi. The Kiwi has been rallying. Okay, no, I'm not long the Kiwi. Actually, I'm short some Kiwi on crosses, but that I just shorted this morning. But let's say the Kiwi is rallying. Okay, and it's been rallying all night. And I step in front of my computer and I went to bed, and the Kiwi was down here at 73.10. Here it is at 73.80, and I go, oh my God, the Kiwi's breaking out. I got to buy it right now. I can almost guarantee you, like 90% of the time, if I decide to buy the Kiwi right now, I'm going to lose money. Because if you think about the proposition of, okay, just a few hours ago it was at 73.08, and here it is at 73.80. It's up 70 pips higher than where it was, you know, 6-7 hours ago, and I'm buying it now. I mean, that means somebody or the people, the smart money that was buying it 7 hours ago, they're making 70, 80 pips off me. I just don't let that happen. Now, that doesn't mean that the Kiwi won't go up another 100 pips today. It very well could. I'm just saying what I have learned over the years is I do not chase the market, and I don't have any fear of missing out. You know, and if I miss something and I miss a move, there'll be another one coming up. So I don't sweat it. And I think that speaks of experience and trading wisdom. And I'm not trying to pat myself on the back. But it's taken me years to really develop that skill to not chase the market. And I miss moves all the time. I miss them all the time. And I'm okay with it. I mean, you know, I always get asked, people, oh my God, did you catch the pound overnight, or did you catch the euro overnight? And more times than not, I'm like, nope, I didn't see it coming, and I didn't get long or short, and so therefore I didn't make money. So oh well, you know, so be it. And this is, you know, what's
funny about that question? They're asking you if you caught it because they're in it. And people, I don't know why, Blake, I don't know, some type of weird human psychology. People will ask you, you know, did you catch the euro? Hope you caught the euro, because they caught the euro. And a lot of people are glad when you say no. It's just, you know, something I've noticed. Some people go, did you catch it? Because what they're saying is, I caught the euro. That's why they're asking.
Sometimes that's the case. And, you know, sometimes, you know, people want to know, like, if you didn't, it also confirms, like, oh my God, I didn't catch the euro long. Did you catch the euro long? I feel better because Blake didn't catch it, or, you know.
Oh, look, yeah, glasses half full. I'm just too cynical, buddy. That's all.
But, you know, here's the thing. Like I said, there's so many moves I don't catch. I mean, if I caught everything, it'd be great. But it unfortunately, realistically, I'm going to catch very few of the moves. And I like to, think that I can, see a lot of moves before they happen, and I'm pretty talented in that. I think that's what's got me as far as it has over the years, is I can kind of catch the beginning of moves as they're coming, probably because I look at a lot of cross rates, and obviously I've got a macro edge with my team, and I can catch a lot of these moves before they happen, and so can ForexAnalytix subscribers too as a result. But that doesn't mean we're going to catch them all, and I'm definitely going to miss some good moves. I've missed a lot of good moves over the years. I mean, look at the pound. I caught the beginning of it, and I missed probably the last 200 pips of that, this huge move that happened. I caught the beginning of it, and I missed the tail end of it. And so so what? There'll be another one out there. Speaking of the pound, I mean, let's talk a little bit about the dollar, and I'm gonna tell you that if you're short the euro right now, you're probably pretty nervous. And this is one of those that I don't know how much upside is left in the euro here, in the near term. Like if you go, let's go over to the weekly chart really fast. If you look at the weekly chart, and let me reset this, okay?
Yeah, it's still nothing wrong on the weekly yet.
Well, we're pushing really key resistance. This is, previous low from 2012. The 50% retracement comes in at 122.06. Now, let's all understand that the euro dollar, and this is a weekly chart, the weekly chart RSI is overbought, okay? And I think it can remain overbought, but I'll tell you, I have a very difficult time trying to chase this thing much higher. The euro dollar could, in my opinion, could spike today to 122. All right, I think that, and that's the 50% retracement of the move from 140 down to 104 or whatever. All right, so we can get to 122 today. If I was long, and I'm not long the euro, but if I was long, I would probably be using a spike above these highs to take some profit.
Yeah,
because any which way you slice it, relative strength on the daily is divergent. Relative strength on the weekly is not only divergent, but it's overbought. So I think any move up to 122, and you've got to use that as an opportunity to sell. Now, the question that some people are going to ask me naturally is, well, Blake, would you short the euro dollar there? I'm probably not going to. I doubt I'm going to play the dollar to the long side. We have to, let me rephrase that. I doubt I'm going to play the dollar to the long side if the dollar just gets plowed today. If the dollar just gets plowed, I think there's going to be more downside eventually. So I just want to continue to try to short it the best I can. If the dollar just gains strength today, something that the Fed does, or maybe inaction of the Fed, maybe they say they don't want to, and they're not going to reduce the balance sheet as quickly as the market had thought, and maybe the dollar does reverse. Then I'll think about playing the dollar to the long side. But that has to go to our analysis of the dollar has to break its channel resistance immediately. Like, we have to get a dollar rally right after the FOMC. Like, that has to happen. And if it doesn't happen, I'm not playing the dollar on the long side. Now, the other thing that I want to point out is if you go to the pound, notice the strong retail sales overnight move the pound back to trendline resistance. Now, this is key because if you go, this is 2014 here, right?
Yeah. Spike
high from 2014. This is the night of Brexit. That high comes in from 2016, summer 2016, the night I was flying to Hawaii, to Kauai. And yes, I still think about that every single day. And a lot of missed opportunities there. And then last night, we spiked right up into the resistance, and we rejected after strong retail sales. Now, if we move above these highs, I think the pound is going to absolutely start screaming. I think the pound is just going to because there's so many people short. I think this is the one pair that I could see myself chasing, not necessarily today, but I might. I mean, I don't know. But I think if we break above new highs, it's just going to trigger all sorts of squeezing. Now, you also have, Prime Minister May. She is going to be speaking on Friday. She's got her speech about Brexit, which, obviously is a big risk, if you're long the pound going into Friday, but, it's something just to think about between now and then. But the pound still looks extremely strong. And I think this is one that could really continue to squeeze higher. I think it's entirely possible.
Sorry.
Yes.
Sorry.
Yeah, no, please. Yeah.
Everybody. Sorry, I just want to add one more.
Because what is Theresa May? What could she say on Friday? I mean, I'm sure you're going to comment about that.
Well, I was going to comment about something else, but it's what is she going to say on Friday is tricky because the whole thing with Boris Johnson again yesterday, and to be completely honest, I don't know what she's going to say. It could be, it's a big question mark for me. So I can't, I really cannot say something. The thing I was going to say is that we saw today's price action, which is very interesting. It ties in with what you said about positioning. Strong retail sales, sterling gets boosted higher, and then straight away gives back all the gains. So that shows that probably longs are taking profits, or basically the bottom line is there are fewer longs in sterling than they were slowly. So I think there are already quite a few shorts, and longs are taking profits, or there are others who are shorting because in any sign of strength, because they think, look, they're not going to hike, nothing's going to change, we don't believe them, etc., etc. So this is what I want to say. I want to say that positioning is getting again a little bit one-sided when it comes to sterling. So just something to think about. And sorry, I didn't answer your question.
No, that's okay. But I guess one thing I wanted to ask regarding that, there was a terrorist threat in London this morning that swatted down the pound right around the same time. Apparently, it's been neutralized. But if there was here, let me go over to. One unverified Twitter account has reported that the area is impressive being given all the Liverpool Street, Moorgate in the financial district of London closed by city police because of a security alert via BBC London Travel updates to follow. So that might have been a reason for some sellers to step in at that moment too.
Maybe although we have to remember these things are not happening, unfortunately, quite frequently. So the impact is getting smaller and smaller. Remember the first terrorist attack, the first incident that had a big move on sterling, on euro, whatever it was happening. Now it's a little bit smaller, unfortunately. People are just saying, we're used to it, which is scary. But yeah, might have been that as well. I don't know. But the way it traded, we got the strong numbers, sterling rallied, and then within 10 minutes or 15 minutes, it slowly ground back. And that just tells me people have been long. Say, okay, fine, I've made my profits. I'm getting out. So reducing longs or new shorts coming in. So I'm just saying this is something to think about.
So Michael asked if Boris resigns or is fired, do you agree that's bullish the pound? What do you think? How do you feel about that? That's a good question.
Yeah, it is a good question. My personal opinion is that yes, it is bullish. It all depends on what kind of impact people think Boris Johnson can have in the UK government or whatever role he has. I personally am not at all impressed, let's say, by this man for as many years as I've been following the whole thing. So
if you ask me, this guy is a clown, Stelio, and he can only.
I'm trying to be diplomatic here, but yeah, okay.
That's why you have me here.
Well, yeah, Stelios is trying to be diplomatic after living in London for how many years did you live there?
16. So I have
16 years. It's a big chunk of your life.
Actually 14 in London, 2 in Manchester, but that's a different, detail.
You're British. Estelle, you're British.
Yeah,
British. British.
Anyway,
Anyway,
my opinion is Boris going is sterling positive, which is what the instant reaction was yesterday, wasn't it?
Yeah, it was, which I find pretty fascinating, and just from an outsider looking in, I do think he's a little clownish, but anyway, that's just an opinion that doesn't really matter. So Steve, I'm sorry, you might have been saying something.
I asked if you guys seen the article about Theresa May being willing to offer a 20 billion pounds to fill in the budget gap, that UK will be leaving behind, as a first concession or whatever. There was an article on the Financial Times yesterday. Did you read that?
Only 20 billion. That would be bullish, I think, if it's only.
Well, yeah, because it was less than expected, right?
Yeah,
yes.
The numbers that have been thrown around were 50 or 100 or something like that.
I thought it was 100, yeah.
Yeah,
okay.
But you know how it is. She's going to offer 20. She knows that nobody's going to say to that.
Yeah.
So they can ask for, let's say, 50, and they hopefully, can find it somewhere in the middle. That's, the usual negotiating tactics. So probably we're at the beginning of it. But even the fact that, that she's starting to offer something shows obviously that, that there is a will to find a common solution. Of course, it's going to take some time, but as it seems, her government also recognizes that they won't be able to make it out, for free or whatever, and that's a first step.
Okay, so I'm sorry, I don't want to interrupt, but I'm going to have to go here in just a second. I want to mention a couple of things before I go. So I'm going to be watching gold really carefully, just going into the Fed, because if you want to look for continued dollar weakness, then gold needs to break out. And I was long gold yesterday.
You called that pop when it was underneath the channel yesterday.
Yeah. I made a few bucks. I mean, it was nothing to write home about. I made it a couple of ducats, and I got out of it last night actually around 13, 12 or something like that. So they'll become kind of where we're at right now. But you can see very well defined if gold breaks higher, then we know that's good confirmation that the dollar is going to weaken. I mean, that's just a really, and the flip side is if gold breaks back below 1300, we also know at that point in time that the dollar is ready to really start a longer term reversal. So I'll be rather than trying to figure out and work out the numbers and go, oh, well, okay, so is that, what are the purchases going to be more or less than the market? Screw that. I'm going to watch gold, and if gold breaks higher, I know it's bearish the dollar. Gold breaks lower, it's bullish the dollar. Gold will tell me exactly what I should be doing, and I'm going to leave it at that. And I don't even know how much I'm going to trade today, but that's really, this is what's cluing me into the dollar moves going into the FOMC today. So I just wanted to leave you guys with that. Also, one last thing, if you guys haven't taken advantage of our new offer, so let me just share it with you. So we have our season offer, new season offer that's valid until October 2nd, which is less than 2 weeks. You buy 1 month, you get 1 month free. If you buy 4 months, you get 2 months free. It's a semi-annual, or the annual is you're buying 8 months and you get 4 months free. Which is obviously if you buy the semi-annual or the annual, you get into our chat room, and this is our that was apparently Matt just posted that. Thanks, Matt. That's everybody's on. But there's like 50 of us in there, and I don't know where he got it.
I don't know where he got that video of my mistress. How did he get a hold of it?
Matt is the only guy I permit in there to put in
I've been
stuff like that.
I've been wiretapped and surveilled.
There's everybody's saying hi. Black Delta said that's my mom. Wow. All right, guys, I'm gonna take you off Jumbotron now. All right, I'm gonna pass it over to Steve, and we have a really good group in there. Everybody's very, you know, we're all buddies, and we all just share ideas, and you know, and obviously laugh when
it's a trading family. It's a trading family.
It is, and it's a very tight family, and you know, I'm gonna say that probably at least a dozen of those traders in there I've been chatting with like that for north of 5, some of them 10, some of them 12 years. So it, you know, it really, I've met a lot of those, the folks in there in person when they come into Arizona. Yeah, I mean, they're just, you know, they're family. So it's a nice group in there. Okay, I'm gonna let you guys go. You guys have a great trading session, and good luck for FOMC today, everyone.
You do, Blake. You do, Blake.
Yeah, good hunting, brother.
Thanks.
Although I'm guessing that we won't have any crazy price action until then. We've already seen today. We had some very good numbers from the UK. We got the pop in the pound. In my opinion, people that believed in FOMC bullish outcome for the dollar found this a great opportunity to be short the cable. I think it's a very risky proposition, and that's what I believe caused the the pound to come down quite significantly and retrace, you know, a vast majority of the gains. I don't believe it's actually the possibility of a terrorist attack. We've seen these happen a lot of times, and now the market barely reacts to them, as Stelios said. Simply because you know, it's a tragic event on a social level, but somebody hitting on some people on the road, and fortunately or unfortunately makes no impact and has, you know, makes no difference to a stock market or to a currency exchange. This is a phenomenon. This is a phenomenon that's very wide and is going to have huge repercussions. But you know, the markets are only discounting like a few months ahead, and you know, not events like that. That's how they work. That's how we have to take it. So the pound, the pound gave us some good data, and in my opinion, if we don't get a bullish reaction due to the FOMC, these numbers we got today are going to have an impact once again once the risk event for the dollar fades. So for example, let's say that we have a neutral outcome for the dollar, or we have a weakening outcome, you might see the cable being better bid than you know, than other currencies. So I don't think the market just you know, completely raised what we saw today, but you know, everybody wants to be cautious ahead of the event risk, which is, by the way, in 5 hours and 20 minutes from now. Until then, to be honest, I don't expect much of fireworks. I think that much of the positioning that we would see ahead of it has already taken place, and you know, the market should remain quiet until then. I mean, range bound more or less. But what we can do
Steve,
is,
I have one, Steve. I have one factoid. You know, I talk a lot to Jim Walsh and read his stuff all the time. I interviewed him here, and he pointed out to me that we, on the COT, there's record long positions in the euro. So, you know, as a contouring indicator, it's probably small and large specs are at record long levels. So, like
yes,
Blake said,
you're correct at that, but COTs and sentiment indexes, and I want to make that clear to everybody, COTs and sentiment indexes and you know, other
they can be wrong.
Signals like that. No, they cannot be wrong, but they don't contain an exact timing element. You can think of them.
Oh, exactly.
You can think of
them. That's why I was saying. Blake said if it went to 22 and you're long the euro, he may not short it, but there's another reason for taking profits if we have another rally up there. That's why I wanted to bring
you know something. Sentiment and positioning are two factors that that play a huge impact. But when we get a trigger,
that's the art of it. That's the art of it.
When we get a trigger that starts the initial move going. So, for example, you can think of COTs and sentiment like fuel in an apartment. Okay, just because you've spilled gasoline in an apartment, that doesn't mean that it's going to burn. Why? Because you still need a match to light it up. So you need some initial spark to get these things rolling. So how do you get that? You get that by getting some kind of news that will create an initial reversal, and that's what's going to trigger the wrong-footed positioning to start unwinding, the sentiment that was one-sided to start, the people that all were on the boat, on the same side of the boat, to start reconsidering or thinking, was I mistaken, etc. And since these are processes that take time, these will usually then create an acceleration to a reversal. But you need the reversal first, right? So I do agree with you, and I do think it's very important, and they can cause the euro, for example, to unwind, a decent amount of the gains. But how will that happen? Only if we get some kind of a trigger. So, for example, if we get a bullish outcome, a dollar bullish outcome from the FOMC today, then yes, these things can play a role afterwards. So if we let's say start breaking a couple of support levels, then these can matter and actually make a move that might have been smaller, accelerate and become much larger. Okay, so if we get an FOMC that gives us a dovish dollar response, that cannot play any role in helping the Euro USD unwind, for example. So we need something. We need a dollar long trigger first for all that to take place, and then yes, that's going to be extremely important. Extremely important. By the way, the USD yen. Blake was talking about the USD yen. He also showed on the 4-hour chart the ascending wedge. Keep in mind that besides that, we also have this zone which I was always paying attention to. It's the 111.60 to 112 zone. So currently the USD yen as well as the Euro USD, because we've already shown that the Euro USD has the potential, if we see some dollar strength, to create this head and shoulders formation. So the same thing applies with the USD yen. So the USD yen is also very nicely positioned to see some dollar weakness in this occasion. So for example, if we get some dollar weakness, the USD yen is perfectly positioned for that. If we see some dollar strength in this occasion, the Euro USD is perfectly positioned for that. So it's nice to to see which kind of pairs are positioned in technical levels that are good for which kind of events. So perhaps after you see what kind of a statement we have, etc., you can decide if you would then want to get involved with the market, which is the ideal currency pair or instrument in general to do that with. So gold, for example, Blake mentioned it as well. We said it since days ago. Gold is also at a very critical juncture because we had a strong move higher. We are seeing a correction lower, but nobody can forget that this area around $1,300 is extremely critical. So, for example, as Blake said, dollar weakness is going to bode very well with gold, because a lot of people have noticed this breakout in the market, and a lot of people would want a big long gold, but they're not doing so in expectation of what's going to happen with the FOMC today. And it's not only, mostly the gold is going to be affected not only directly because obviously it's the instrument we're looking at is gold against the dollar, but it's also the fact that don't forget that for many people, holding on gold and silver on a little less, but is a matter of an opportunity cost in comparison to the yields, right? So for example, if we get a dovish FOMC statement today, that's going to
less
get
opportunity costs.
Sorry?
There would be less opportunity.
No, I meant it's a matter of comparison. You know, it's a matter of opportunity cost in comparison. You know what I mean? So when we have high yields, the cost of holding gold is big.
Right.
When we have very low as we've had, or even zero, or even negative real yields that we have had in the past, the cost of holding you know, part of your portfolio in gold is zero or negligible or even a little bit positive. Okay, so a lot of people are you know, are viewing gold under this scope. And you know, what happens today if we get a dovish statement, for example, we will get a bid on the bonds, which means that we're going to get yields falling, which means that gold is going to be more appealing, and the opposite if we, you know, if we get a hawkish. By the way, speaking of the treasuries, because this is something very, very important, speaking of the treasuries, there they are, they have undeniably provided us with a bearish break. Okay, and we weren't since we were up there. Keep in mind that they have now given us, I'm not counting today because it's too early. I mean, today we're going to know, you know, later what's going to happen with the reaction to the FOMC, but they have given us, after making this little false break above the ascending channel, 8 consecutive down days. Okay, 8 consecutive down days. So, you know, this is a move you cannot dismiss. And this is obviously, you know, a very strong technical break. And if we get a hawkish Fed today, you know, this move might even accelerate to the downside. And of course, the exact opposite applies to yields. The most critical level, though, in my opinion, is this very nice confluence. And we wrote that yesterday as well, which is the confluence of the 78.6% fib of this move higher, the 200 daily moving average, and this horizontal zone that initially capped, as you see here, the recovery. So for me, you know, this area at around 125.70, 125.80 is, you know, critical, is key. If we breach that as well, then I think it's a confirmation that the move lower is resuming, the move lower that started from this, you know, impulsive drop from the 2016 summer highs. Okay, so you know, these are the things I'm monitoring more or less, and you know, I'm waiting to see what's going to happen. One other thing I talked about earlier, and you mentioned it as well, is I said yesterday, if you remember, one of the first things I said as an introduction before we even went into questions was that I was monitoring closely what would Aussie USD do with this confluence here. And, you know, the fact that it held very nicely, you know, is showing that, you know, there's a good chance that we're going to, you know, see a move higher towards this ascending wedge before going lower.
Nice monitoring.
Yeah, okay, thank you. So if you see, we're still also having this RSI divergence. You pointed that out as well. So I think that this is also a currency pair that is nicely positioned. For example, if we see an initial dollar weakness and we hit this wedge resistance, this is going to be something I'm going to be looking to be short as long as I see, you know, a reaction from there. Now, on the other hand, if we get a failure today, let's say we see strong dollar and we get a failure, and this candle that now looks very, very bullish reverses and goes back down here, it might have meant that, you know, this is just it, because don't forget, this is a second consecutive very nice bullish candle, but this candle can look totally different in 5.5 hours from now. So, you know, be a little bit patient. I don't think this is the time to take new positions unless you're scalping and you are looking into going in the market and going out of the market again, you know, before we even hit the news. Crude, by the way, we keep talking about crude as well, is still playing ball very nicely with us. So it gave us 3 consecutive spinning tops, and, you know, we had a very nice gap higher and another spinning top so far, but I think that, you know, it looks good. It looks good, and you know, unless something happens, it should resume its its appreciation. As you see, it has tried to fake out people plenty of times, yesterday and the day before yesterday. At some point, it was looking that it's turning around and it would be very bearish. But it's more than obvious that there is a healthy bid under this market, and it's still holding very nicely.
Grega's pip on that pattern in play has a nice lead. I think he's looking for 52.
If you remember, that's the first area I'm looking as well, 51.50 to 52. Okay. If you also look at the weekly, if you also look at the weekly, which shows the big picture, don't forget that I mentioned that last week, that we're also getting the break from this channel. And don't forget that 52 area is an area that has given us highs here, there. So it's an important level for the market, okay? And don't forget that we also have the inverted head and shoulders that we showed yesterday that targets even higher levels, which is actually at 53, this inverted head and shoulders. This one has a target at roughly 53, okay? So I still don't find a reason to be short crude. I think it still looks good. So let's go ahead and read some questions. Stelio, if Boris resigns or fight, do you agree bullish pound? Yes, I do. I met that clown 3 years ago. He came to my shop. I've never met someone with such status who was so weightless. Yeah, I agree with you. I mean, the guys, I'm English and I agree. The pound rallied when he threatened to resign. No need to be diplomatic. You're right. Good day to you. Good day to you as well. Long USD yen here. No, definitely not before the FOMC. I'm warming to long USD Swiss, looking at daily triple bottom as holding. Also, yes, as we said yesterday, I made a specific mention to that. As I said yesterday, we are in the middle of a big range having to do with the USD Swiss. But I remember that I said specifically that if I was forced to be something here, I would probably be long. As it seems now in the very, very short term, we're also creating a little triangle here. There it is. There's a support line, there's a resistance. Okay, so yeah, I wouldn't take a position ahead of the Fed, especially since we're in the middle of this range. But if I was forced to be something, I would probably choose to be, I would probably choose to be long here. But I have no position, and I wouldn't want to have one now. But I can tell you one thing for sure. Any break above, any daily close above this 97.70, let's call it, area, or below this, as you called it, the triple bottom, which is at around 94.30, is going to be a major development and is most likely going to produce continuation and strong continuation. So I think that the best idea here, as I said yesterday, is if you don't want to gamble ahead of the Fed, is to wait to see a confirmed break of either of the levels and then be long or be short a retest. I think that's a safe way to play this. But I definitely believe that USD Swiss is very, very interesting, and sooner or later is going to produce some very strong move. And I will want to be there and catch that. Kazim, having to do with the USD TRY, we had a look at it yesterday, and yes, I would wait for after the Fed as well, for sure. If they come out dovish, G's, meet Dow Jones and 23. Oh yeah, Luca, thank you for reminding me. Let's have a look at the indices, by the way, because we haven't done that in a few days. Okay, first of all, let's move this from here. First of all, I remind you that I was quite clear after seeing these perfect ABC corrections, both in the SPX and in the NASDAQ, okay, and we had an equivalent situation here in the Dow, I was quite clear that no matter what you do, the same applied to the DAX as well.
Although the DAX is not at new highs, why?
Because of the euro strength. That's why.
Okay.
And you know something. And you know something. Since you mentioned it,
it could be a failing rally.
No. Let me state it. Let me state it otherwise for people to understand.
Go ahead.
Do you think that the Nasdaq and the SPX and the Dow are at new highs if you measure them in euro terms?
Oh, of course not.
Yes, correct. So people are noticing.
So you're saying that's a nominal gain because it's based on the 10% decline in the dollar?
It's not really. It's a nominal gain mostly in the DAX if it hits new highs while the euro is weakening. We're now doing the opposite. I'm just saying, I mean, the euro is strengthening now. It's a nominal gain. Why? Because a big majority of the international investors are using dollar as their main currency. But when you're going to other indices, you can view it like that. But I have to mention that some effect, despite dollar being the main currency that investments happen, some of the strength you're seeing is also a product of the dollar weakness. Okay, because for example, if you're a Japanese investor, if you're Swiss, if you're European, and one of the places you're investing to stocks is the US, obviously to buy a stock of Apple, ceteris paribus, let's say that Apple held the exact same stock price. Okay, so to buy one when the euro was at 105, or to buy one when the euro is at 120 is totally different, right? You have a discount because you need to exchange your euros to dollars, and that's going to give you more dollars to buy stocks. So if you want to view it like that, yes, the DAX is not at new highs, but the DAX is measured in euros. So if you also measure in euros the SPX, the Nasdaq, the Dow, they're also not at new highs. And people should remember that. Now, all of them played ball the same way. Channeled corrections, ABC corrections. For the DAX, it was a little bit more complicated, but still perfectly channeled. And breakouts, and we had warned about that. I mean, I'm the first one that tells you that I wouldn't be buying US stocks no matter what, because I think that we're getting close to some kind of a collapse. This artificial central bank bid and buoyancy is going to have an end, because everything. I mean, I've studied enough history of the markets to know. I'm only 37 years old, so I haven't been around for many financial cycles, but I've studied enough indices and financial history to know that there is never a new paradigm. You know what I mean? There is never okay, now we found the magic way to get stocks being up 10% every year, because don't worry about it, central banks have our back. Every story has always an ending, and it's usually bad ending, especially when we get to valuations like we currently have. So I think that at some point in the near future, we're going to have a collapse. I don't know what's going to be the triggering point, and I really don't care about it. But I know we're going to have a collapse, because this situation is unsustainable. Okay.
Or at least a 20-30% pullback anyway. I think we're peaking in here between here and Friday. I'm looking at the 25-15 level. I start talking about that. NASDAQ maybe has another 50 points in it, but I'm actually looking for Dixie low and S&P high late this week.
Personally, Dale, I think that after so long, there are so many imbalances, and plenty of them are hidden in the system, that you cannot possibly get a 20% move lower without getting a 40% move lower. I don't know if you get what I mean.
Yeah, because of the structure and...
Yes.
Okay.
Yes. Have you ever played the game called Jenga?
No.
It's a little game you play by putting wooden building blocks, and and then you have to remove one from somewhere in the bottom and place it on top.
Oh.
At some point, this thing collapses.
Yeah.
So this is more or less a game of Jenga. So at some point, when this tower loses its balance, you know, it's not easy to stop at 20%.
Yeah, what would, you know, the previous highs in the S&P is kind of a natural, I think it's almost halfway back, would be 1550, 1570, right in that level is where we had a big breakout. That was the 2000 high, 2008 high. That would be a natural place for it to come back to.
There.
If you go to your monthlies or weeklies at least.
Yeah, this is a daily, by the way, and this is also a nice pitchfork. I was always monitoring. I don't know. I don't remember if I've shown it here. This is a pitchfork I've had on my S&P for.
Ouch. It just stabbed me, and I have an interview now.
Yeah.
Oh man, stop using those pitchforks and face.
Yeah, and as you see, it has worked, you know, perfectly. And you know, we're currently above. Yeah. So
yeah, Luca's saying, why not one more injection? You know, tax cut, repatriation, keep it going into year end. That's possible.
Sure, it is possible. Of course it is. Of course it is. I mean, definitely it is. And you know something, since we talked about indices, we reached, first of all, if you remember, we reached my first target, which was the 127.2 in the SPX, which is 2,510. My next target is, you know, the 161.8 at 2,535.
Yeah.
I really believe that, you know, maximum there, we're going to have a move lower again.
Yeah, that's what I'm thinking. And that may not be the final high, but you'll get at least some type of clip, you know?
Yeah. There's no question about it. We were going to get pullbacks, but you know something, as I said here, did I have any reason to believe that this was a reversal? No. I mean, I made it very clear. This was an A, B, C correction. I mean, how much cleaner than this could it have become, right? So, you know, you have to play, you know, you have to play with what you have. And if you see in such a bull trend, a move that is clearly corrective, I mean, you know, you have to treat it as such. That's it. It is what it is. So same thing here. Let's say that we get something from the Fed that rattles the market. Let's say that the Fed speaks today about a real plan of unwinding its balance sheet. I'm guessing that's going to have a negative impact on stocks. And let's say that we see a move lower. I cannot outright go ahead and say, okay, this is the top just because, you know, we saw a strong move lower, because we also saw a strong move lower here, okay, at the 10th of August. And, you know, then 4 days later, another one, and that was it. That's it. People came in, central banks,
Tracy,
whatever it was.
I see you. You're up next. I'm going to make you presenter. Steve, it's 6:02.
Okay. Sorry for eating 2 minutes of your interview. Okay, so
yeah, you know, I'm just saying, you know, I just don't like to have the
you're absolutely right. Sorry, I didn't see the watch.
Do you have a clock in your? Do you have a clock in your office? I'm curious.
No, I don't, because I'm wearing a watch, and you know my computer.
I know what to get you for Christmas. So, okay, okay, buddy. Great analysis, and
good luck to everybody. And we're going to be issuing, of course, intraday updates. I'm guessing a lot of them after we get the FOMC. So stay tuned, chat room, you know, mobile notifications, etc. Enjoy the interview, Dale.
Thank you, Steve and Tracy. We have Shy Girl with us, everybody. I've just made you the presenter. Thank you for your patience and for your time, for coming here today to address our community. Waiting to hear your voice. Not sure if you brought any charts to share with us.
I don't know what screen you have on mine up.
I have the crude chart up with all your different support areas and a blue channel, and then on the right hand side it looks more compressed.
I don't know. Where's the screen so I can see what you even have up? I have no idea what you have up.
Okay. It's it's a couple of crude charts. So if you're in the room, I see you moving your cursor around. So that's what we're looking at. Yeah, you're on that one now.
Where it says sound check?
Where you're using clouds, it looks like bands on the right hand side, and the other one has channel lines and many different
that's
levels.
That's actually not a good one. That's actually not what I would be watching.
Okay.
So that's my screen one. So
can you see your screen now?
no, but it's not.
Okay.
Can you see that
That's
one? It's
yeah.
gray. It's just gray, right?
Okay. Yeah. And on the right-hand side, looks like it has some kind of volume indicator on the bottom. ECID Delta VO5. You know, we know you're a crude trader, Trace, and I know you follow other markets as well. And there's plenty to talk about with what's happening in the energy complex. But, you know, I'd like to bring up something I think that is pretty important, something that you and I had an experience with you over the last 24 hours. You know, a lot of the guys here in the industry, and, you know, I've been in it forever, and we all think it's such a tough business to be into, especially if you hold yourself out to the public and you have clients or you have subscribers. And, you know, I didn't even think about it till yesterday, how much more you have to go through as a woman, as a girl, as a female in this industry, that all that stuff that happened at like Fox News and everywhere else in the workplace is something to overcome. And I know there are a lot of great, talented female traders. You're one, Nicola Duke is one, Lydia Idem Finkley, so many that Raggy Horner, Kathy Line, there's so many great female traders. What do you have to go through in addition to just the stress of living off the market, being a woman in this business?
I mean, I've never, you're always going to come across, you know, sort of the bad egg, so to speak, on Twitter and things like that. So, you know,
yeah.
I mean, my best thing, you know, I can say it's pretty much, you know, ignore or block. But, you know, I came from the CBOT and I worked on the CBOT 4. So
Right.
there's pretty much nothing that I haven't, you know, seen.
Yeah, it was probably bad down. It was bad down there too, wasn't it?
Yeah. So I mean, you know, there's nothing, you kind of build up a thick skin when you work on the floor like that. So, you know, I just don't, you know, but the thing that is different than, say, working on the floor, you're working with these people every day. So you kind of know their personalities and know that they're joking or whatnot. But, you know, when you come across people on Twitter, you know, you don't know all these people. So,
okay, well, that's one element. I would also bet that when you're on the floor and you're learning to read the markets with whatever you were doing on the floor, holding a deck for a guy, doing charts for a guy, I bet it was also difficult to get people to acknowledge and take your work seriously for a while. Was that also an issue?
Yeah, I mean, definitely, you know, you definitely have to prove yourself, but I think that
even more so than a guy, even more so than the doors open so much faster for a guy. They're going to be taking them more seriously, and all the stereotypes are really difficult for a woman in a man's game, you know, and it's it's not a man's game, it's a trader's game.
No, but like when I first started in the industry, I mean, I literally had to like go knocking on doors begging for a job because I just wanted to get into the industry. So, you know, I finally found like a total boiler room, you know, hocking up, you know, that would hire anybody off the street. And I basically had to beg for the job. But, you know, that was years ago, but still, you know, what it is.
Yeah. I know I hated those days then, but now I look back on them fondly. But
right?
How many cold calls did you make a day after they hired you?
Good Lord! Like we had to do like 400 or 500 a day.
Oh my God! My head would explode. I'd have a stroke now.
I could never do that again ever. Yeah. Thank God I was young.
Okay, so let's get to your bailiwick, and it's crude, and you know I've been following some of your tweets, and you've been constructive on this market. You know, a lot of people were looking for a revisit of, you know, the lows that we had at the end of or beginning of 2016, or at least a right shoulder on a weekly chart. So tell us what your charts are telling you about crude. We're getting a nice pop with all the war drums beating.
Yeah, I mean, well, let's see. Right now, I mean, what I would advise right now, you can see we're just in this chop zone. So, I mean, the chart is constructively bullish, right?
Yes.
We know that. But in the meantime, we're kind of in this chop zone. So, what I had posted yesterday, if you are currently not in a position, or if you're a day trader as opposed to a swing trader, what I would wait is for, a market breakout.
Yeah, I saw that tweet.
You want to wait till the market breaks out, retouches, and goes, or if it collapses here. Now, that would be my,
Okay, because you said that traders get chopped up in these zones, and what you were preaching is sometimes the right trade is no trade.
Yeah, I mean, you can wait while it's in the chop zone. I mean, usually, newer traders kind of, day traders, should have been long, short, oh my God, and they're chopped out, a million times in here thinking it's going higher, it's going lower, it's going higher, it's going lower. So the best way to, sort of treat this as the day trader is, wait for the breakout, retest, and go, either direction. Now, overall, again, this chart is, constructively bullish. And we do have repair areas up here above.
What kind of charts? Is this a point and figure? Or
this is a TPO chart. So.
Oh, okay.
Right now we have repair areas, so it's market profile. So we have some old repair areas up here in the 53 area. So if this market breaks out to the upside, then, I would expect it to probably try and test this area.
Okay.
Then, but we do have some a bit lower right here. So, we could also have a false breakdown and then go back up.
Okay. Very,
so, I just like to be aware of, where these areas are. And the blue lines are just, and naked POCs. So,
they're what?
But yeah, naked POCs. So POCs that haven't been revisited.
Okay. All right. So very interesting chart. You've been using this kind of chart for a while. You learned this while being on the floor?
Yeah, I mean, we use market profile all the time on the floor, but if you want to learn it, Jay Dalton has some great books on it.
Okay. Yeah. So you brought opened my eyes, and I'm sure, hundreds of eyes. I've never really experimented with these. I appreciate you doing that. So you're a day trader and purely technical, Trace?
No, I have two separate accounts. So I swing trade and I intraday trade.
Okay. Another pearl, some people try and do it all in one account. Why do you do it in two?
Well, I do it in two because if I want to, if I'm trading, if I'm say in a swing trade long, then I can't trade against myself. In other words, in the same account, unless I'm trading a different month, I could be trading November and I could short December if I was long November.
Got it.
Or you can just have two separate accounts, and that way you can day trade against yourself while maintaining a swing position, either long or short.
So there have been some interesting fundamentals in the market. I've read articles like, if anything, there's an armed conflict with North Korea, crude would skyrocket. I could understand if there was something happening in the Strait of Hormuz, but can you explain to me why crude oil would go higher if there was a problem on the Korean Peninsula?
I don't think that necessarily North Korea would, aside from the fact that there's war.
Yeah, I didn't get it either.
Terrible, but
they're importers.
North Korea produces literally 9,000 barrels a day. Literally.
Yeah, they need Chinese oil.
I'm not missing. Yeah, so they're not a major player in oil at all. Oil traders would be looking for conflicts with China or something like that, where we have major imports. But North Korea is pretty much, a non-threat as far as
Yeah, I
oil
didn't
is
get
concerned.
it. I didn't get it. So I thought maybe I was, just didn't understand why that would have an impact on oil prices. Now, do you find it interesting that the Saudis pulled their public offering? I just found out about this when I was interviewing Adam Button. The IPO for Saudi Aramco has been pulled. And can you glean anything from that? They just didn't think there'd be enough interest with $50 oil?
Well, I mean, first of all, I think they're delaying it, quote unquote. But when I initially heard about it, I was very outspoken on the fact that I didn't think that it would ever happen. There's a myriad of reasons, all politically, why I didn't think that it would happen. First and foremost, why give up your nest egg? First of all, why make a public offering when you don't really need to? Second of all, you have to, so many family members are involved. They all have to agree to be audited. The whole company has to agree to be audited. And, Saudi Arabia has been very protective of, their reserves and their audits and things like that. So I couldn't really see them having some outside agency come in,
Yeah, like the SEC.
Intervene in, all of their business.
You think the NFA would show? You think the NFA would show up on their doorstep? They have to me. They have.
But, yeah, I mean, there's another problem. If you want a listing on NYSE, then you have to deal with the SEC, and I just don't. I just never saw that being something that would be of interest to them. So,
interesting.
Quite frankly, I'm not.
I always looked at IPOs or limited partnerships as, if it's so great, why are you offering it to the public?
Well,
you know
exactly.
what I mean?
And and there's really no reason. There is no need for them to do so. I mean, it's not like they're, hurting for money. If oil prices, above $50, why? There is no need for them to do so.
Right. So, but at 90, they might get interested if they think it's unsustainable, should that happen. And speaking about a possible, I'm looking for 62. It's the top of the wedge that we had before we went to 25. Let me ask you this. After our president's speech at the UN, looks like he's most likely going to pull out of the Iranian nuclear deal. And Saudis are going to Israel to talk, and they weren't always historically best of friends, but the enemy of my enemy is my friend. This market,
exactly, right?
Yeah, so I mean, this market has no risk premium priced in it, and I've actually interviewed some people that think there is going to be some kind of conflict that would probably take a month or so to happen.
I don't know.
Yeah, next spring.
Well,
you don't think so?
Maybe the next year. I don't know. I don't see the U.S. actually pulling out of the deal, I don't think that's necessarily going to, entice or enforce other countries from pulling out of the deal. So I don't think that, as it is, there's not really, U.S. oil is not really doing business with Iran anyway. You have, deals with like Total, and some of those other countries already have business deals going on. So I don't think it's going to pull Iranian oil off the market because there's too much investment going on, even if the U.S. does pull out. But I mean, we're not really doing a whole lot of business with them oil-wise anyway.
Okay. So from a practical standpoint, you don't see it. From a political neocon perspective, it's possible. In my opinion. So there is no risk premium in this market right now, is there?
Not for that. I mean, there's you've got anything Nigeria or Libya or oriented that's been going on for years.
How about Venezuela?
Something happens, that's already priced in. Venezuela, the problem with Venezuela is their production has been declining for several years. they've got this new thing, they priced it in yuan, but all in all, that really doesn't matter because Venezuela is actually not really getting paid for most of their oil. They're paying their debt in oil. So
right, that's their currency.
It's not,
and your outlook for U.S. frackers at these price levels, do you continue to expect rig counts to expand or just hold steady?
If we maintain this $50 level, then or higher, then obviously shale is going to thrive.
Okay.
And, there's no they would have to sustain. We would have to sustain lower oil prices, like low oil prices, for months to really, I think pull the steam out of that. Even if we went down to 40 really fast and came back up, that's not really going to alter shale production that much.
Let me ask you this. Going to our bailiwick, does the dollar come into your consideration when you talk? I mean, is a weaker dollar or a strong, more bullish for crude, or is crude demand because it's a petrol currency? Could we have a strong dollar and strong crude?
So, you can have a strong dollar and strong crude. We've had that before. The correlation kind of goes in and out. Obviously, in general, a weaker dollar for all commodities is more bullish in general. But the dollar oil correlation has gone in and out. And I'll post a chart later. I posted the chart before. So it's not, it's definitely not a one-to-one correlation. In fact, a lot of times oil is more correlated to the euro than it is the dollar.
How about
but again,
Canada? How about the USD CAD
as well?
Yeah, and that's broken down. That correlation.
So,
okay. So you do keep an eye on it, though. It kind of factors.
I do keep an eye on currencies, absolutely, because they do affect it, as well as like NOK. So for Brent, that's very correlated as well.
Okay. So do you have a business model? I know you have a Twitter handle. I don't think you have a website. Are you mainly just trading for yourself or others?
Yes.
Okay.
It's just me. I don't have any services or anything like that. I have a blog that I haven't kept up in months, but that's
So if you want to read yesterday's newspaper, go to Tracy's blog. But I do.
There's a lot of good old stuff on there.
But let me ask you this. I don't remember from our prior interview. Does your handle at Shy Girl mean that you were born and raised in Chicago?
No, actually, I just started my Twitter handle. It was just because I was living in Chicago at the time.
Oh, okay. Do you miss it?
So I do. I mean, I still have a lot of friends there. And
well, the trading floors are like a ghost town now, Tracy.
Well, yeah. I mean, they're pretty much gone. I mean, they only have one room open, and
it's all options.
Pretty sad. I pretty much sad.
Yeah, I think they're going to open a bowling alley there at the CBOT.
Right.
Yeah, but I
think
wanted.
they rented it out some.
Yeah. We were there in the glory days. At least we lived that, Trace. So
right, it was fun. I mean, it was a lot of fun.
It really was. It was like a ready-made social gambling environment. You can't top that combo. So I want to thank you again for coming to talk to me and our community today, Trace, and everyone hearing my voice and Trace. You could follow her on Twitter at ShyGirl, at CHI Girl. And I wish you continued success. Thanks for showing us this market profile stuff. I'm going to look into it. And as always, my trading warrior sister, I hope pips rain down on you for the duration, of your trading career.
Excellent.
Thank you. Thank you, Tracy.
All right. Thanks, Dale.
Good hunting. Good hunting into the Fed. All right. Favorite car. Oh, someone wants to know, what's your favorite car at the moment?
my favorite car at the moment. The Jaguar E-Type is one of my favorites that I have on my screen. So, but I like them all. So
I know, yeah. One of my partners, Stelios, said that you're a car fanatic, so I forgot to ask you that. So thank you, Natish. Now you know, and you're also you also have some separate accounts for your cats. With someone in the community is saying.
Yes, absolutely.
So you're building a trust fund, for your cats. All right, Trace.
Right.
Have a great day. Good luck with the Fed, Tracy. Face, have a great trading day into the Fed. Good hunting. Thank you, Steve. Thank you, Blake. Thank you, Face. Remember, we still have that seasonal special going till October 2nd, and just like trades, there's a window of opportunity to execute it, and there's also a window of opportunity they'll be closing October 2nd for the value. And most of all, my friends, don't just count your pips, count your blessings. See everyone tomorrow for the aftermath. Adios. Thanks again, Trace.